Richard Perry in London. He's an analyst at the trading firm Hantec Markets. Good to have him back with us, Richard. Now, we were talking about Saudi Arabia. They announced austerity measures as well as a 1 million barrel per day cut in its oil output in a bid to boost prices. Has that had any effect on oil markets so far?
Well, yes, today it has. We've seen oil markets around about 3 to 5% higher, depending on which contracts you look at. And it certainly comes as a surprise that the Saudis have cut production by another million barrels on top of the already agreed production cuts that the OPEC Plus group have been agreed for May and June of 9.7 million barrels. Now, this is more of a gesture play by the Saudis, and they're trying to encourage other countries to really come on board with further production cuts. And already we've seen Kuwait and the UAE suggesting that they are going to cut production as well. So how the price moves, I think, in the coming days will be important, because if you start to see, say, Iran or Iraq also agreeing that they will be cutting production, or maybe even Russia, that will help to boost the price. But there is still, on the near-term basis, a very important bump in the road ahead, and that is the fact that we've got the June contract expiry for WTI, which caused a massive problem for the May contract expiry a month ago. That contract expiry is in next week. So how the markets respond to that, with the obviously issues over the storage in the States, is going to be a really important factor for oil prices. But near term, they're seeing a boost from this production cut.
Okay, looking at global stock markets now, they've been swinging between gains and losses. Investors have been reacting to the growing number of economies that are reopening after weeks of lockdown. Tell us more about how investors are feeling about that right now.
Well, as you say, that we have had risk on and risk off on equal measures, really, in the last few sessions, and maybe even few weeks, really, for equity markets, where they haven't really managed to gain too much traction either way. It seems as though that the upside impetus from the stimulus measures from monetary side and fiscal side has just started to lose the upside momentum. And the constant trading around whether the countries are reopening or whether the infection rates are starting to go up again are a real issue on a risk-on, risk-off basis. Now, the issue that we might see coming down the line is how Wuhan responds to the infection rates going up. How can they get that back under control? Because that, I think, could be the potential kicker for another market correction, because at the moment, equity markets have really gone fully in on this recovery, and they're not really pricing in too much downside at the moment. So I think if Wuhan really struggles with getting its second wave of infection rates under control, we could see another kick back lower.
Okay, Richard Perry from Hantec Markets in London, thank you as always.